Right, we're live, up and running. Quick mic check. Hello, guys. Hi, Matthias. How are you? Glad to have you. Hope you all had a nice weekend, and here we are, ready for a new session. Good morning. Yeah, I'm glad. Okay, so seems like audio is coming through. Andy, how are you? Glad to have you. And video is coming through, so let's get into it. Hey Patrick, how you doing? Guys, welcome to the trading room. My name is Saul, glad to be with you. Before we get started, remember this is the trading rooms are only for educational purposes, and nothing I say here or show here or do here is meant to be a buy or sell signal on any instrument, any time frame. It's just the way I approach the markets, and I read the charts, and the way I analyze and manage my trades and make decisions in the market. So I hope you can trade. I hope you can take some of the principles we discuss here and you can apply them to your individual situations. With that being said, as on Mondays, we're going to try to take opportunities in the larger time frames. So we're gonna go ahead and scan the major pairs and to see if we have something lining up on the daily charts. Look for opportunities to the upcoming week. We're also going to look at the economic calendar, and if we have some spare time at the end, we might go to lower time frames and do some trading together. Okay. So with that being said, let's jump into the charts. So let me share my screen, and let me first start with what we have during the week. So let's just pull the calendar here. Okay, so regarding major events during this week, we have a very active week. So let's try to understand the possible scenarios out of each one of them. We'll start tomorrow. Okay, today you can see it's a very quiet day. Tomorrow we have GDP in Canada. So we'll see how the economy is doing there. Remember, having a higher growth in the economy, that means that maybe there's no interest on keep raising interest rates because the economy is doing well. You know, activities is happening, money is flowing. So a good GDP or a positive GDP is not always good for the demand for the currency. Okay, so just being aware of that, and it's expected to come higher than previous one. So let's see what's the final number out there. The city consumer confidence doesn't tend to be very important. Employment rate in New Zealand, similar to GDP, as more people is getting employed, is good for the economy, not so for the currency. So, but usually it's not a trend initiating announcement. So let's just skip that. Then on Wednesday, as we start the month, we have the FOMC statement in the US. So that's going to be a big one. Okay, we have an expectation of increasing 0.25%, which is not a lot, and we start to see smaller increments in the interest rate. Okay, meaning inflation is stabilizing, and the target is still maybe 5% on the interest rate, but we're not jumping half a point, we're just jumping a quarter of a point. So as long as there's no surprise there, and I don't see a reason why I haven't a surprise in there, that should be already priced in the market. So just be aware of volatility. If there's no surprise, we tend to see on the funds rate a whips on both sides. Okay, a spike in volatility on both sides, and then price stabilizes because everyone is expecting that. Okay, so we shouldn't see an increase in the demand, the USD, as long as we have no surprises here. Okay, but do be aware of volatility. Then on Thursday we have the same, just for UK, and look here, we are about to jump in half point. Okay, we discussed that inflation in UK still very, very high. We see inflation in the US decreasing, in Europe decreasing a little bit, but in the UK still very, very high. So they will need to keep being aggressive with their interest rate hikes, and we'll see how's that being translated in the charts. Okay, so we have on Wednesday USD, and then on Thursday in the UK we'll see the repercussions of that. Not much more on today, and then on Friday, on Thursday, and then on Friday we have the non-farm payroll. Okay, of course that always, they tend to be very, very volatile, and they tend to start trends as well in the market. So we have Wednesday, we have Thursday, and we have Friday. Okay, so enjoy today, tomorrow maybe for ranging movements and ranging markets, and then expect on Wednesday, Thursday, and Friday a lot of volatility and directional movements. Any questions on that? I thought with good economy, GDP, more consumers have higher spending power, boosting currency strength since more goods are bought. Yeah, remember, it's good for the internal economy. Patrick, that's a good question, but we're comparing here flow between countries. Okay, so this inflation is going down, which is good for your economy, and employment is increasing, and the economy is strong. That doesn't mean there's going to be a lot of demand for your currency, because depending on who's trading your currency, but you always need. We see the demand of the GBP or any currency against another currency, and I will be moving my money where more interest rate or more interest I'm going to get on that currency. So if we see a good economy and inflation going down, I don't expect interest rates to keep hiking or to keep increasing, so I will not leave my money in that currency. Okay, that's the understanding. Okay, that's for fundamentals, and we will jump quickly into the trading view just to see a little bit of what's going on the dollar index. We're at that, and we'll see a similar chart on the Euro USD, but we're heading, this support level, which is not very, very strong. Okay, you see there's not a lot of demand. There was a little bit of demand up here, and we draw this, I believe, from next week, and we're just pressing to that area. So if there was a lot of an important demand back here, we should have seen already a reaction from this level. Okay, and the fact that we're not seeing that, we have that chance or that probability that we're going to actually continue lower. Okay, the US dollar decreasing in power. By now, given the fact that we have this very extended compression, and we are approaching this what looks like a weak demand area, we should have seen already a reaction of that area. The fact that we're not seeing that reaction open up the opportunity to see the opposite movement, which would be a continuation lower. Okay, so we'll see individual currencies right now. We jump to the MT5, but overall, for the dollar index, we had already those opportunities to have that reaction and to continue higher. We failed on doing that. We tried here and we failed. We tried here and we failed, and we just we try one more time here and that failed, and it just looks like it's going to continue in that same direction. So let's jump into the charts. Let's see how that looks on our charts now. So Euro USD is like the opposite of the dollar index. Most of the dollar index is based on the euro, so we tend to see like an opposite chart, and we see as we approach in that weak movement. Let me zoom in a bit, but I do need to mark this area. Okay, so we are against that supply. Okay, so if there was a very strong supply in that area, we should have seen already a strong reaction of that area. Okay, so we had a little bit of reaction back here, and we had some. When you're studying candlestick patterns, you see that tail or that tail, and you say that's a short, and those signals are failing, but because there's not a lot of supply back here. So as we're not getting that movement, and we just see more demand areas just holding, okay, demand and push higher and holding higher, I see the possibility of breaking even higher to the next supply area, which would be up there. I believe if there was a reaction or a reason to react to that area, it should have happened already. Okay, so I would keep my bullish bias on the Euro USD, but I am aware that we have all these high impact news during the week. So the fact that we're not reacting to past supply doesn't mean that we're not going to have fresh supply being created real time. Okay, so we might have with those news announcements, maybe tomorrow or Wednesday or Thursday or Friday, we might see the market continuing, in a very tight range. Has been a like a very consolidating market during the last days, and we might continue all that way during the week until we have a trigger or a catalyzer that initiates and creates a fresh either demand or supply. So in case that consolidation, that range breaks to the upside, we will see ourselves easily to next supply, which is up there. We're speaking about 150 pips, and if we're going to break down, so we're going to next demand, which is down here around 200 pips. Okay, so that's the movement. So I guess we can, there's a lot of ways on how to approach that. We can set our buy stops and our sell stops, try to catch that breakout, and that would be, I guess, a good reward trade, because we have this range is 100 pips. So the break to the upside would risk 100 pips. Okay, let's say you get the buy trade and you set your stop loss below the box, below the range. So you have a 200 pip to a 100 risk, and the same for the opposite. That would be a good risk reward ratio trade for a breakout movement, or to get a confirmation of the breakout and then the retest of the zone, and then once you get confirmation of the breakout, then you wait for that retracement, and then you get the continuation. Okay, you join the movement. Which direction is this going to break is hard to tell. It really depends on what's going to happen on during the week, and with all these announcements. What we think is going to happen as retail traders is very, very different to what large trading desks are doing and positioning themselves. So my bias is still to a bearish, to a weak USD, meaning this is going to continue to the upside, but who knows? Okay, I'm not 100% sure this is going to break to the upside, to the downside, but I do believe that one of these weeks is a good week to break this range, either to upside or to the downside. So that would be for the Euro USD. Let me see the chat trading Euro USD. So if we have time at the end, we might come back to the charts and have some trading. CAD is correlated to commodities prices. Yeah, that's true. Strongly to the oil. That's CAD and oil, they move very, very similar. That's the strongest correlation. Not so much to other commodities, I don't know, to wheat, for example, but oil and CAD are very, very correlated. That's a good point. Trading week. Hi everyone. Anna, traders, have a great week. Profitable trading week. Same for you, Anna. Good to have you. Euro is very strong today. Yeah, relative to, as a day, yeah, we have this movement. But as an overall, in a larger picture, has been inside that range for weeks now. Okay, let's continue. So that's for the euro. Now let's see what's going on the pound, because pound, we already, everyone knows there's going to be an increment, an increase in interest rate of half a point, and we had no reaction of that. Okay, there's not a very strong. I remember these strong movements. They were for NFPs, if I recall right, or CPI, and we don't have there wasn't enough reason why to break to the upside. Although we already know there's going to be a half point increment. So I'm guessing if there's going to be a 0.5%, okay, we're not going to miss that number. I think we're going to go down on this one, because everyone is already positioned for a movement higher. Okay, so that flow to the market already happened with the announcement of what's going to be expected. If we miss the number, of course, there's going to be huge number to either direction. But if the money that was already allocated in the market didn't cause the breakout of that resistance area, if there's no surprise, we shall see a movement to the downside again. Okay, so that's going to be an interesting one. And volatility has been dead on the pound, which is going very, very choppy, up, down, up, down, up, down. Even the structure on the daily is not very, very clear. But what we do know is, if we miss the number and there's a surprise, they increase by more than 0.5%, which is very, very, very unlikely, we will see the break to the upside until next important supply area. If we don't miss and there's no surprise, I think next movement here is to the downside, already all the way to the retest of this area. Now if we approach, okay, no fundamentals, and we approach this just as a risk reward trade, and we tried last week to do that, and I took partial profits on that because there wasn't a lot of movement. We said, if this is just a range and it's going to turn into a I'm trying to approach it just purely technical, and this is going to be ranging for a while. If I take a short position now, okay, if I trade to the short side, and I place my stop loss above the range, and I place my targets below, above the around that area, okay, before the support area, I have a very, very good risk reward trade. Okay, I could be risking 150 pips and trying to get almost 400 pips. So it's 2.5 risk reward ratio. We took that trade last week, and we had a movement. Okay, we took a similar trade last week. We had a movement to the downside, but the market just went back up. Okay, there's really looks like there's no new trend, and has been trapped, to the sideways movement. I took a little bit of profit as we were moving this movement to the downside, but then the market just completely came back, and I closed the trade. But the setup is still valid. If we approach if we're approaching this purely as a range, if we go short, we have a good risk reward ratios still. If we go long, we would have to wait, and see where do we place our stop losses, and then to decide if that's a good trade. So if I need to pick a direction, I would pick the sell now, just in terms of risk rewards. So let's just try that one more time. And something like that. Okay. And then, of course, depending on what happens with the volatility and with the news announcement, we might have I don't know, something different. Okay, so that's for pound dollar. Okay, for that. Now pound yen, again, we also analyzed this one next week. We were at the very same spot. Last week we were around this area, and we mentioned the same. If we break this area, we have all this gap. This is just a huge breakout. It's like a gap. So if we break to the upside, we easily will continue to this area. The question is, where do we place our stops? Okay, but if we fail to break, then again we have a good trade. We can set our stop losses above the range, and our targets down here. Because of the yen situation, I prefer to take this trade against the dollar and not against the yen. But purely technical, this could be also a good trade. Someone was mentioning last week we're going to break to the upside and fill the gap. We might. The question is when. Okay, and if we do, where should I get out of the trade? Okay, if I go long, where do I place my stop losses? Purely on the dailies, I could place it below this pivot point, or all the way down here. Now, if it's going to be down here, my stop loss, I don't have a good risk reward ratio. If you place it there, I don't know if this is a strong enough area to protect me, or to keep price before taking my stop loss. So this is not a great trade for my approach. Grim on euro yen, yeah, we'll get there. So just let me have that open here, and we'll get into that. Okay, let's do dollar yen, and then we'll jump into euro yen. So dollar yen, we have the dollar situation, and we have the yen situation. So we mentioned that we're trapped, okay, in this channel. These types of channel tend to break to the upside. Okay, if we have this channel formation, we tend to break to the upside as long as we meet strong demand, okay, on the other side, and that's what we're missing here. We don't have a very strong demand area back here to initiate a bullish movement. So the bias is still to the short side. We identified different supply areas we have. Okay, we have 1, 2, 3, 4, 5. That we have movements to that area, we can try to catch the reaction. And we're kind of trying to break that channel in terms of time. I believe, again, this week we should have a confirmation of where we continue to the downside. And if we test this support, you see it's not a lot of support here or demand here. So if we retest that area, we have the opportunity or the chance to break to the low side. If we break to the upside, we might have some movement until we met supply or supply or supply or supply. So it really is a matter of how you approach the market. You want to go long, set your stops down here and to target to either of those areas, or you wait for the market to approach those areas and then you go short. Just because of the past movement, I see more supply than demand here, so I would be trying to go short on dollar yen. But again, this week I think we'll get a lot of confirmation what new trends probably for the rest of the year, what's going to happen. Okay, so on the sidelines, I'm on the sidelines on this one. And euro yen, there was someone here. I see a flag pattern on 4 hour after a double bottom. Flag pattern, so I'm guessing this is one bottom, double bottom, and that's the flag. That's for green. So that's the double bottom. When I analyze chart patterns, I'm always looking at supply and demand. Okay, so the pattern, there's money better to wait and see. Okay, so this a double bottom. I really care of how that pattern is forming. Okay, this was kind of a double top as well. We could call that, but I really want to see new demand or supply being formed. So we had this second bottom, okay, and we have a strong movement to the upside. I would like to go see if there's enough demand behind that movement. Okay, what was the initiator of that movement? But yeah, technically that's the pole, and we have the flag, and after those movements we tend to see continuation to the upside. So let's go and see on lower time frames how the flag is being formed, and if we see how the flag is being formed, we see supply that has been retested, a little bit of supply here, we have fresh demand, and this last demand was formed. So we might be reacting already to that supply back there, but if we go down, we certainly have some demand down here to create a new movement to the upside. Back here we had, we had the first initiation, the pullback, so that demand might be already consumed, and then we have this next demand area which haven't been testing. So even if we continue in that pole or we break to the downside, we have a very strong demand here to try to catch a buy position. On the dailies, we have a very similar pattern than the pound, less similar to the dollar yen, but euro and pound similar patterns. Okay, we have supply consumed already, demand that hasn't been consumed and might trigger a movement to the upside all the way to next supply. But we have that same challenge. If I go long now, where do I place my stop losses? Or if I'm go short now, then I can place my targets at the demand areas and my stops above, and in terms of just purely risk reward would make more sense. Okay, so it's a hard pattern to trade. Okay, I'll stay on the sidelines with that. Okay, and Aussie dollar reacting or trying to react to supply. But if we zoom in on last formation, we have a lot of demand behind. So let's just try to get those. Okay, so as long as we continue like in this weak movement to the downside, when we meet these demand areas, we can expect a continuation to the downside, especially because we have the trend to the upside. We have countries like AUD that we know that they keep high interest rates, so there should be more demand for that currency. So my bias here is to the upside, even if we have a reaction to the supply and we have some movement to the downside. I'll wait for price to approach these areas, and then I'll try to build my trade for the retest of this area. Okay, remember, one thing is just like planning something, and after that we have fresh and new demand and supply being created because of the news announcements. Okay, so if I see the market giving me new information and invalidating my pre-analysis, then I'll change my trade plan. Okay, but just purely technically, bullish bias. I know we're reacting to that supply. I'll wait for a pullback, and then I'll try to build the retest of that same area. Okay, that would be the plan. Just see on daily chart, bias seems up. Monday better to wait and see. Jeremiah, I see what you say. Like accumulation, and in terms of supply and demand, those channels tend to break to the upside. Okay, if we have those channels to the downside, those tend to break to the upside. what I'm missing here is the demand to cause that. Okay, I don't see a strong demand, and if there was demand there, we already reacted to that. Okay, so if we're going to have a strong movement from here to the upside, it's going to be caused by a news during this week. Okay, so there's going to be new demand being created just in front of our eyes. Okay, not because we are reacting to past demand or something like that. You might not see that regarding strategy you are using. It can also be many things depending on your time frame as well. As an example, the price made the rebound 233 MA on 15-minute charts. Yeah, Maxim. You're right. We all see a chart and we see different things. So, two traders will see the same chart. One will want, one will see reasons why going short, and the other one will see reasons why going long. The most important thing is to have a plan for both scenarios. Okay, if I go in, if I go long, where do I get out? If I go short, where do I get out? And I try to keep my risk predefined. And that's the idea. And we did and I'm a true believer that having your risk predefined and then managing your trade properly is more important than trying to get the right direction. Okay, I did with Jordan over Trade Delicious. We did this exercise. We just picked a direction. We try to make money in that direction, and as long as you manage good your positions, you should come out in profit from the markets, regardless the direction you choose. Aaron, did you cover NASDAQ 100? I didn't. We can open that in a second. Guys, gold, just to quickly over gold, trend is still up, but we're losing momentum. Okay, we're stretching. I guess if I throw a Bollinger Band or something like that, I think we're going to be touching the upper band and waiting for a pullback, for a retracement. We've been saying as we had this compression right here back then, and we broke to the upside, that confirmed the momentum to the upside, the bias to the upside. That hasn't changed, but we are getting into a weak movement as we approach supply back here. So the bias is still to the upside, but I don't know how far we're continuing. Okay, we had some attempts. If we just read the dailies, we had an attempt to go down and that was rejected, attempt to go down, that was rejected, attempt to go down, that was rejected. But in the other hand, the continuation to the upside hasn't come as well. Okay, so I guess we're still waiting for something to decide on the direction. So on a pullback towards demand areas, I would be building my long positions. Okay, that's the one I like the most. We have some down here. So as we pull back to that area, I will try to build my long positions, because the trend, or last impulse has been to the upside. So very, very rarely we have a very strong movement like that, then some sideways movement or a channel, and then all the way down. Okay, so if this is going to go down, this is going to go down in a way like that. Okay, it's not going just to push lower and lower and lower. So my very next trade would be waiting for that supply to come to the market, react to those demand areas, and try to build the retest of these areas right here. But at least here we have a clearer bias in the market. Okay, Euro Franc, please. And we had NASDAQ 100. Let's see if I have it here. So we've got the NASDAQ and the Euro Franc. Okay, so Euro Franc, last movement has been to the downside, and we have this is interesting. Okay, look at this channel. This is similar to what we see on the dollar, the US dollar yen, correct? Okay, so we had this channel here, and we had the reaction. Okay, so that's what I'm expecting to happen on the dollar. Okay, like a kind of a reaction, but then meeting supply, and then continuing lower. Okay, because of fundamentals, I do expect euro to increase in value against the franc. Franc tends to keep their interest rate very, very small and tight, and the euro, they are increasing interest rate. So I see no reason why not retesting that supply area. Right now, I'm in the sidelines, and it's not a pair I trade a lot. But just based on fundamentals, we should see this market going back to healthy levels for the franc economy, which is around that area. Okay, clearly above the parity level with the euro. Okay, so right now we're at parity. I don't see a lot of supply here. I see the supply all the way there. So we had extreme demand. We should see that extreme demand driving prices all the way to extreme supply, which is all the way up here. So my bias here would be to the upside. And for the NASDAQ, I'm not a indices guy, but I think we still have a bearish leg to come before the correction. Okay, so just approaching like technically, we have, in terms of supply and demand levels, we are right now at a level we have tested many times. I don't know how many, how much resistance is left over there. So there's a chance we break to the upside to next supply, which is up there. Now regarding the demand, we had that demand, and we have that demand. Let me just confirm. Those are strong demands. Okay, so that you see this is a very valid demand area. Okay, we had like the accumulation and the breakout and just continuation, and the other one is also a very strong movement. Okay, you see the breakout to the upside and then the continuation higher, and we haven't tested those levels. So there's a lot of demand and not a lot of supply. Let me just confirm that. Yeah, actually we have some. Okay, that is a supply area. Okay, that we need to react to. So expect a reaction. What I expect now is a reaction to the downside, to either one demand, or two demand, or three demand. Okay, one of these demand areas, and then a push higher. But that might take a few days. Okay, like today we're already testing the first demand area, this one right here. Okay, so we might react already to that. If we, in the upcoming days, we might break that level, we will see this demand area, and if not, this demand area, and from there expecting reaction to the upside. And I will target next supply, which is here. Again, I don't trade a lot of indices. In terms of risk reward, I guess you can go short, say set your stops, and go into this or that demand area. That would be a good risk reward ratio. In terms of bias and how price is forming, I would rather going long. Okay, buying either that area, that area, that area, or that area, and try to go long. Okay, and let's just finally see if we have something just lining up, if we can. Yeah, I'm tempted here on the AUD USD. See the formation. Like we said, we were expecting like a pullback on the dailies, but I see how the reaction has been very, very slow, and on the 5-minute chart we're following like this weak channel. So I would like to try to catch the reaction and the turn to the upside, but I might be getting a bit early to the trade. So yeah, let me just throw. Okay, in the 1-minute chart, I mean, I can set up a short trade, and then as we go up, I can keep building my short position, and that will be a 20 pip setup if I go all the way to that supply area, or I can wait for price to come lower and to react to that demand area, and then just for the retest of this area. Just bought some euros on gap. I find it very interesting on 30-minute time frame. Is that the euro USD cream? So I don't expect the market to break this range until we have a high impact news. So as we're testing the top side of the range, I would actually be looking to short this market, as I don't expect the breakout to happen before Wednesday. So euro pound. Yeah, I see what you say. We have this fresh demand. We're holding on supply, and we might break all the way to next level up there. I'm more inclined to the I'll just try to build a little scalp as we approach this supply area. And let's see if we can have a little channel, a compression as we approach this supply area. We might just intraday position. Yeah, 30 pips is it's nice. 13 pips is it's a good intraday. It's a nice intraday trade. Now I'm not sure where to place my targets because we should get it there, but we also have the chance to break this area and continue all the way lower to retest demand, which is low here. So in case we break the structure, we might go all the way to the low side, to this area right here. Let's see. And if I get confirmation that this is a fresh supply on a 1 minute chart, I'll wait for a pullback to that level and then I can short again. Okay. But that's something the market will give me, will tell me what to do. Okay, guys, I think that's what we got for today. I want to thank you all for coming and for staying, and yeah, let's see next week what unfolds, during the week and what happens. Just remember, Wednesday, Thursday, and Friday, very big fundamental announcement coming out. So just make sure you manage risk accordingly. And yeah, we'll see you next week, guys. Have a nice one. Bye bye.